Futures trading involves substantial risk of loss and may not be suitable for all investors.
Good morning. It's Wednesday, July 17th, about 6 a.m. Central Time. Overnight, the precious metals are mixed after yesterday's explosive rally. Gold futures overnight touched a new all-time high, $2,487.40 on that August futures contract. Silver futures hit 31.65. Now we're trading down about 27 cents at 31.19. Gold futures are off about $15 from those highs, but still in positive territory. So yesterday we saw retail sales come in flat, which was better than expected. However, traders they shrugged off that better than expected news and piled into the risk assets. We saw some good earnings out of some of the Dow weighted companies, and the Dow Jones was up about 700 points. The Russell 2000 continues to track that rotation, and we saw the S&P 500 up about 20, NASDAQ in and out of positive territory. So the markets, in my opinion, are still trying to digest what a Trump-Vance economy and global economy would look like. Energy independence, a tough stance on China. Those are two things that I think traders are weighing in on, and at least I'm weighing in on as well. I think that thoughts of a 60% import tariff on Chinese goods would really dramatically affect their GDP. If I was China right now, I would consider boosting some strategic reserves in specific commodities and really the agricultural products at these low levels before you get that kind of administrative change. Now, today we are going to get housing data, industrial production, beige book, and hear from two FOMC members. Now, back to the markets. S&P 500 making new lows, down about 1%, it's down 56 points. The NASDAQ down about 1.5%, down 300 points. Even the Dow and the Russell are under pressure as well. So the U.S. is considering some tougher stance here on China with regards to chips. The NASDAQ futures down again 1.5%. Nvidia, Intel, and Apple all fall before the opening of this session here. So we'll see how deep it's got to get before the bargain hunters really come back in. Now back to Trump. Bloomberg Businessweek sat down with an exclusive interview, and one of the biggest takeaways and one of the questions that I always had, because he had such a tough stance on Jerome Powell, but look, the Trump administration's had a tough stance on everybody. They'll call you out for anything here. But allowing him to serve out his term as Fed chairman throughout 2026 or 2028, whenever it is due up, really takes out a lot of uncertainty in the market, especially from a trading aspect. However, Trump did say that he should consider holding off on cutting rates till after the election. So I looked at the CME's Fed Watch tool. It did dip a little bit. I'm not sure that, or saying that Trump rhetoric is moving the needle at all, but what I'm saying is it was 100% yesterday. Now it's about 96, 97%. You start getting 5% changes and, hey, a couple good data points and things like that. We could be back down to, an 80% chance, and really it could be a one and done here, and we do it in December. I'm still the believer that SEP and December are on the table. Some people are talking about July. 6.7% chance. I just don't see it happen unless things really fell apart. But getting into some of the markets, dollar index breaking below the 200-day moving average, that's been positive for risk assets. Remember, Vance wants a weaker dollar, and that could be playing a role on the dollar index weakness. One of the best charts I was looking at and identified yesterday, wanted to get involved with, got too busy with the precious metals. Swiss franc, break it out to the upside. Pops up, couple days, consolidates, breaks out to the upside. That will trigger along on my system here on my own proprietary trend discovery system. Something else, 10-year treasury yield, treasury notes breaking out to the upside, but we are pulling back here today. Getting into the gold market, critical levels here, I really think is 24.25. I think if we break below there, could be a little bit of a sell-off down to about the 50-day moving average, but it's still too far away. I think too many traders are really piling in on the gold market. Silver futures consolidating. I really wish they would have broke out to the upside, but I think it gives people an opportunity to consider adding positions, looking at call spreads going out. You do have kind of some clear lines in the sand. You don't want to see it below 30.56. You also don't want to see it below 30.36, which is the 50-day moving average. Trend reversal point 29.93 takes it back to a neutral trend. Something I I don't like with regards to the silver is its direct correlation recently to copper. Copper's what drove silver up at the start of the year with that explosive move that peaked in May. Now, if you look at copper, it broke to a bearish trend yesterday under significant pressure. But as it being the only metal that's bearish trend, some people are starting to nibble at that market. Did see crude oil futures looking like they're kind of rolling over on the charts. Better energy independence, a lot of pumping, things like that. OPEC could realize that, U.S. oil at $60 to $65, they might want to consider selling as much as they can at these higher levels as they're doing right now. So just some observations there, not specific recommendations. You got any call or any questions, give me a call. I think it's going to be another busy day. 312-858-7303. Remember, futures option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.